Today, we're jumping into a paradox that has Wall Street scratching its head. On one hand, you have Adobe, a software giant that is, for all intents and purposes, a virtual cash machine. But on the other hand, you have its stock, which has just been completely crushed. So what's the real story here? Is Adobe's stock broken, or is this the bargain of a lifetime? Let's figure it out.
Okay, let's get right to the heart of this mystery, because this chart, well, it says everything. Since 2021, the tech-heavy Nasdaq index has skyrocketed 73%. In that exact same period, Adobe stock has cratered by 44%. I mean, how is that even possible for a company so central to our entire digital world? That's the puzzle we're going to solve today.
And this is exactly the kind of deep dive we love to do every single week. So if you enjoy cutting through the noise and really understanding the story behind the numbers, do us a huge favor and hit that like and subscribe button. Trust me, you won't want to miss what we've got coming up.
To really get this, we've got to break it down. So first things first, let's just forget about the stock price for a minute. Let's focus only on the business itself. We're diving deep inside Adobe's financial engine to build a bull case, and believe me, the numbers are, well, they're pretty impressive.
First up, growth. Is the business even growing anymore? The answer is a huge, resounding yes. Look at this. Despite all the pessimism in the market, Adobe's revenue has shot up 84% in just the last 6 years. We're talking about going from under $13 billion to a projected almost $24 billion. The engine is definitely still running.
It's one thing to make a lot of money, but it's a whole other thing to actually keep it. And this slide shows that Adobe has absolutely mastered this. For every single dollar of software they sell, a full 30 cents drops straight to the bottom line as pure profit. That is an elite net profit margin that most companies can only dream about.
All right, now just take a look at this number, 123%. What on earth could that mean? Well, it might just be the single most important number for understanding how insanely good this business actually is. So that number, that's the return on invested capital. And in simple terms, it means for every single dollar Adobe reinvests back into its business to grow, to build, to hire, it generates $1.23 in profit. Just for context, anything over 20% is considered world-class. Adobe is playing in a completely different league.
So you've got amazing growth, incredible profitability, and off-the-charts efficiency. And what do you get when you put all that together? You get a cash-generating monster. Just look at this. Nearly $10 billion in free cash flow, and they barely have to spend anything to maintain the business. It's just gushing cash.
So what does the management team, the people who know the company better than anyone, do with all that cash? Well, their actions speak way louder than words. They are buying back their own stock aggressively. They're on track to spend almost $11 billion this year alone doing it. That is the ultimate vote of confidence.
And why should you even care about buybacks? It's actually pretty simple, because your slice of the pie is getting bigger. As the company buys up its own shares and basically makes them disappear, your single share now represents a larger piece of the entire company's profits. Pretty cool, right?
All right, let's just recap the bull case here for a second. We have a business with record-breaking fundamentals, elite-level profit margins, a management team that's shoveling cash back to shareholders, and a stock price that's near its lowest valuation in a decade. On paper, it seems like a total slam dunk.
Which, of course, brings us right back to our main question. If the business is an absolute financial fortress, a powerhouse, then why is the stock crumbling? What are we missing here? What is the market so afraid of?
Okay, now it's time to flip the script. We have to look at the other side of the coin, the bear case. Let's put on our skeptic's hat for a minute and try to understand exactly why investors are heading for the exits. So the market's fears really boil down to 4 main points. First, the stock is in a clear downtrend, what traders call negative momentum. Second, its tangible book value is negative, which just means its value is in stuff you can't touch, like its brand, which some folks see as risky. Third, debt is creeping up. And fourth, the big one, the elephant in the room, the fear that new AI competitors could completely disrupt their entire business.
And all that fear has led to this, a massive valuation reset. Back at the peak in 2021, investors were so excited they were willing to pay almost 20 times the company's book value. Today, that hype premium has completely vanished. It's been cut almost in half, which shows you just how much sentiment has soured on this company.
So now we're left with 2 totally conflicting stories. On one side, you have the business, which looks like a finely tuned weighing machine, just measuring out incredible profits year after year. And on the other, you have the stock, which feels like a chaotic voting machine driven purely by emotion and fear. So how do we make sense of this?
You know, this investment scorecard just sums up the whole paradox perfectly. Look at these grades. An A for growth, an A+ for profitability, an A for efficiency, and then a big, glaring F for momentum. The business is an honorable student, but the stock is totally failing the popularity contest.
And this brings us to a really famous quote from the father of value investing himself, Benjamin Graham. He said, "In the short run, the market is a voting machine, but in the long run, it is a weighing machine." And that just frames this whole Adobe dilemma perfectly, doesn't it?
So I'm going to leave you with this final question. When you look at Adobe, which one do you think is going to win out in the end? Do you trust the market's short-term vote, which right now is driven by fear and momentum? Or do you trust the math's long-term weight, which is driven by actual profits, real cash flow, and steady growth? So, what's your verdict on Adobe? We really want to know. Let us know down in the comments. Is it a buy or a sell for you? And hey, while you're there, let us know which company you want to see us break down next. Thanks for watching.